It's a Bitcoin podcast. The only one that's making your money is you. Listen to the Bitcoin podcast.
What are you doing out in the snow?
Working. To investigate.
It's 32 degrees below 0 Celsius, and my dad is working hard, looking beyond the extents of hypothermia, hypochondria, and all the elements combined. He works to build a fence. A true servant, a true worker, a true exhibit of hard work and ethics. This is my father, in whom I am well pleased.
It's a Bitcoin podcast. The only one that's making your money is you. Listen to the Bitcoin podcast.
Hey, everybody. Welcome to another one of the Bitcoin podcast interviews. I'm really excited about this interview because I've listened to Mr. Reggie Middleton speak on macroeconomics and crypto and just all sorts of great, knowledgeable opinions since I got into the space back in 2012, 2013. I've been hearing you speak about Bitcoin and how it's affected by other markets. And one of the talks that I remember that was awesome is you talked about how banks are going to have to cannibalize their own services to keep up with how fast crypto moves. And I was like, that makes a lot of sense. But anyways, I don't want to ramble. Welcome to the show, Mr. Middleton. How are you?
Thank you very much. And just, you know, my father is Mr. Middleton. I go by Reggie or anything polite, but, you know,
Awesome. I believe everyone wants to know, do you do any voice acting on the side? Because your voice is like, I feel like it's powerful. Every time I'm like, God, this guy sounds like James Earl Jones.
I yell at my kids. So,
That makes sense. Well, I guess I could start really generally. I don't want to ask what we typically ask, which is like, how did you get into crypto? Da, da, da. Because I think the audience can go research that and they can figure that out on their own. I kind of want to get to the meat of it, right? We're obviously, this is one of the larger downturns in crypto sentiment, price, all the above since I've been in it. And it's really, I don't want to do any like, pie in the sky. Let's look in the stars and figure out what's going on with the market. But I would like to hear if you have any knowledgeable opinions as to what could be causing these, what you said right before we got here. It feels like there's bubbles everywhere, right? So where does this point us, given your experience, to go at when the dust finally settles?
well, that sounded like a compound question. So, um,
It is.
okay, so let's let's break it into pieces and tranches and one slice at a time. So, I guess part one is what is the cause of the downturn? That be a valid?
Yeah, if you could, try. I
Okay.
know that's kind of like,
Contributing
not worth a lot of
factors
time.
to the downturn, maybe?
Yeah. Well,
Yeah.
I think that there's one obvious one. There's two obvious one. Um, Not obvious. There's two obvious factors. One, you realize that the Bitcoin prices are cyclical. You know, you have big booms, big busts, and that's been the case since I've been in it since 2013. It's exacerbated this time because you have many more actors um, into the space, and a large or material uh, force coming from these actors are the Wall Street, the professional investors. As a professional investors pour money in, if you take a look at the prices, you see there's a very tight correlation between the digital assets, the popular digital assets, Ethereum, Bitcoin, etc., and the more traditional assets, stocks, stock derivatives, bonds, etc. This correlation didn't exist in the beginning, and the reason was because they're not correlated. There's very little similarities between Bitcoin, or at least Bitcoin as it was originally intended in the white paper, Ethereum, and IBM stock, the S&P 500, etc. But when you have a bunch of investors pour capital in, they all think the same way. They all follow pretty much the same rules, and then they have a drawdown. And they have a reason to pull money out of crypto, particularly if you had a significant gain in crypto. That causes sell action. The sell action causes downward pressure on the price, and price goes down. That correlation is synthetic and artificial from my perspective because my one of my lead developers, engineers, smart developer, smart engineering guy, but he's a developer. He's not a finance guy. He says, so why should crypto go down when inflation goes up? And I said, it shouldn't. He says, I didn't think so. But if you listen to the mainstream media and a lot of the smart pundits, whether crypto or otherwise, they're saying there's some type of pressure due to increase in inflation, and that's ridiculous. If anything, if the crypto currencies, the actual currencies, are doing as anticipated, they should benefit from inflation because the fiat currencies, which get hit by inflation, and then the solution for the hit is usually more inflation, they benefit relative to fiats when pricing fiat. But all that has been erased because you have an increase in correlation because a bunch of the people who just like to see the prices go up and down and chase the movement are into crypto. So the fundamentals are not applying. So those are the two reasons: historical cyclicality and an increase in correlation with traditional assets because you have, the traditional asset mindset coming in. So that's an extended answer for tranche one. And I've been talking so long, I forgot the second part of your compound question. So help me out.
It was more so like, what does it look like when the dust settles? But I think that's kind of hard to predict given what you just said is like the fundamentals have changed. Um,
Well,
because,
the
go ahead.
fundamentals haven't changed.
Sorry.
The investor base changed. The fundamentals are what they are, and that's an important point because um, a lot of people come in and say the fundamentals have changed, and if they have, they have. But 2 + 2 still equals 4 today, as it did 5 years ago. So um, as for where things settle out, I won't call it prediction, but observations on the present, and as being analyzed with a student from the past, because I like to study things. That doesn't mean I write about it. We're going to see a lot of feelings get hurt as intellectual property right holders start exercising their rights. Um, Patent holders, trademark holders, possibly in copyright holders. The reason is because the ethos, the mentality of the cypherpunk early developers in the crypto space were generally, from what I've ascertained, anti-IP, anti-IP protection, etc. And not trying to debate that because I'm not now, but that's whether here or there. The courts and the law of the land are not, and they're very strict and very firm patent, copyright, and trademark laws in the U.S. As a matter of fact, every significant economy you have has significant intellectual property laws, and there's a very tight correlation between the more successful a country is economically and how tight their intellectual property laws are. The largest intellectual property office in the world is the USPTO, which sits in the United States, which is the world's largest economy. Number two is China with the SIPO. Number two, they're very, very prolific. Number three is Japan, allegedly one of the best run intellectual property offices in the world. And go down the list: the UK, the European Union, etc. Not necessarily a big fan of the way they do business, but there's a tight correlation. So you don't necessarily have to like IP or believe it's suitable for software or anything else, but your opinion means very, very little in a court of law.
I agree
Okay,
with this. And I think before going into this intellectual property conversation, which I really do want to, I want to ask is, do you find it ironic or interesting that what was originally I would say, proclaimed as a asset to put in your portfolio because it is uncorrelated has become so correlated
Well, it's
by the nature of
ironic.
them doing it, right?
It's ironic, but what most people are putting in their portfolio is not the asset that was supposed to be autonomous,
Mhm.
like Bitcoin.
Mm,
Read the Bitcoin white
You're right.
paper
Yeah.
and then take a look at Bitcoin. You're not going to see the same thing. Okay.
no.
Bitcoin is not peer-to-peer internet cash. It's not. You know, it's an investment vehicle.
Can I ask something, Reggie? Is crypto like
Yes, I could
macro?
barely hear you. So can you speak up or come close to the
Yeah,
mic?
yeah. How about now?
That's much better.
All right. So macroeconomically, isn't crypto just overflow for tech equity stocks across the board globally?
I
Or
don't
no?
think so. No.
Okay.
Uh, Crypto is a database-driven computer code.
No, from a hedge fund standpoint, like money was injected at such a scale that dwarfed the previous bull runs, right? Every like, let's say 2017 to 2018, after that ended, right? Money came in back into the system that was probably not it was probably not retail, right? Let's just say that, right?
Okay.
Can we assume that that was mostly those large hedge fund or those large, VC groups? I don't know, arms of like even larger entities financially. Can we assume that like crypto at this point, in terms of like the percentage of people invested in crypto, the money that's on the table now is not retail. It's primarily like, I don't know, professional.
I think it's an admixture, and the
Okay.
retail admixture is shrinking. So that's not to say there's not more retail people investing. There are a lot more retail people investing, but as a portion of the whole, I think you're correct. There's more professional money coming in. But if you take a look at it, there's not more money going into a new space than normal. Nominally, there
Yeah.
is, but there's printed so much more money that, of course, is going to look at it. If you take it from a real perspective, it's about the same as every other paradigm shift and bubble. From the 2000s, the dot com, you know, on down the line. Um, and large funds have not got into it yet. If they do, you're going to see a big difference because they herald trillions of dollars versus billions of dollars. A lot of this money came in as venture capital firms, partners of these firms, and the small and medium-sized hedge funds, I think. But when the big money comes in, you're not going to be able to miss it because you're going to put a lot of money into a small doorway. So, and that big money has been extremely foolish, in my opinion, or imprudent in their lack of due diligence for things such as IP. If you look at any other industry, um, you have a venture capital firm, they want to put money into a semiconductor fab. They do significant due diligence on IP. They want to make sure that the guys that they're investing in actually own the IP that they're claiming to make these chips. And they're not going to just take their word for it and throw money at them. They're like, produce a patent. Let's do a patent search. Make sure we don't get caught out there after we put the money in. Same thing with biopharmaceutical companies or any other technologically driven industry. Crypto is about the most technologically driven industry you could think of. Nobody does IP search. Nobody cares about it. As a matter of fact, they do the opposite. We don't believe in patents. And again, it's irrelevant what you believe in. It's what the judge and jury believe in and what the law says.
Mm,
So
that's
like
very
a good
interesting.
portion of this, like you've mentioned, like the mentality, early mentality of crypto, and a good portion of it still is this cypherpunk, non-copyright. Like we don't go for patents, and if we do, they're mostly protective. These types of things, and because institutional investors lack the vehicles of their due diligence, which is doing a patent search and looking for these traditional methods for understanding risk, that they're not entering into the space.
Okay.
Or they're not
Well,
ready to because they can't do the due diligence they're accustomed to.
Well, I disagree on 2 points. Number one, um, if you get a patent just for defensive purposes, then you got a patent. So,
Yep.
what's the
It can be
difference?
held in such a way where it can't be. It's more difficult to use in an aggressive manner.
What's aggressive? If I decide you invent white ties, okay, and the gold and match with any suit because white is a universal color, let's say. And then I decide to sell white ties. If you ask me to stop and threaten me with patent action, is that an aggressive manner or a defensive manner or offensive?
If a patent is gotten and held in such a way where it's in an organization that will never use it, it's only gotten so that others can't get it and use it, or for filing purposes so that others people can't file for it because it wasn't filed for to use it, for patent trolling purposes or something. That would be an example.
Okay, so suppose I just sell your product. Are you gonna use your patent or are you just gonna let it sit there?
Oh, under the guise of an organization like that, it would just let it sit there
Okay, so then what's the purpose of getting a patent then?
so that others can't file for it and use it against you. To keep you
But
from
they
You're talking
already,
about
but you see, here's
I'm
a
not.
circular
I'm
argument.
ignorant in this scenario, so I'm asking if this is even a reasonable thing to talk about. Like,
No, I think it is because I want to talk through this because I think there's a not a legal misunderstanding, just I think a common sense, logical misunderstanding.
Mhm.
If you spend $20 million to develop your white ties, okay, you want to recoup your $20 million and hopefully make a profit. If I just take your white ties and start selling it, am I hurting you?
yes, in my opinion, yes.
What's the other two opinions? I'm curious.
under this
If I
example,
take, if I, you have a hit, I know it's real estate is very easy for everybody to understand. So you're sitting in your house, you just purchased a house with your wife and your young child. You finally have a 3-bedroom house. You moved out of your 1-bedroom apartment. And then I move in with 2 of my friends. They're homeboys. We just go in, we kick up shop, we take over your room, we rent out one of the rooms. Okay. If you ask us to pay rent or leave, would that be aggressive or defensive or neither?
I think this is a
I think-
straw man example.
I think,
Now, this is interesting because obviously
hold up, I got an
I've done this
answer. I think
before,
it
right?
depends-
It's a
I
straw
think it
man
depends.
example when we're using a property that you own, but if you're losing someone else's property, it would be more immutable. And this is not personal, so I'm not aiming at this personally.
I understand that. Yeah.
Yeah, it's just that it's much easier to understand the positive attributes of property protection when it's your property we talk about being protected. When it's someone else's property, we don't need to use it. You know, it's aggressive if you try and protect your property, etc. But according to the Constitution, everybody is due ownership and protection of their property. And so protecting your property is not an aggressive action. And if it isn't, then where do you live? I plan on coming by right now. Well, not
I'm
next
curious
week.
about how this is used in the context of what could be considered a public good, right? So, like, who gets to own a public good? And like, it's easy to reason about the assets that live on a public good, but not necessarily the infrastructure that runs the public good itself. It's like a
Like
lot
your
of people
house.
like to think that these things should be free to use for anyone who would like to use them. And since this technology is strictly community based, there's no price to Bitcoin unless there's a community of people that agree on that. Who gets to own the technology that builds Bitcoin?
Okay, so if your house is built on communal land, that means I get to move in and rent it out to others.
No, but
Okay, well,
here's the thing,
we're in
like,
full agreement then. You see, we're in
the
full
patents
agreement. But the
associated
reason
with-
you're agreeing with me is because we're using your house as the subject of the conversation. I think, I'm guessing, I can't be, but when I've
I
had this
think the
conversation
concept
with
of
others,
property is very muddy here, right? Because like,
I don't
who
think it's
owns-
muddy. Personal property. Patents are personal property, just like your house.
so what about the patents that build the technology for Bitcoin?
What patents are you referring to?
I have a question.
What if there were
Okay.
some? Like, right, for instance, here's an example. We didn't use Schnorr signatures in the beginning of building Bitcoin because there was a patent associated with it.
Okay.
Instead, we used ECDSA, which was like free to use or more
Okay.
permissive to use.
Okay.
And because of that, we were able to grow Bitcoin and not be under the ostensibly be sued and Bitcoin never grow because it was being used using a technology that was under patent.
Right. Well, I don't really. Usually, you get sued for using patented property when you use it without the patent holder's permission. You don't get sued as a function of using something. You get sued as a function of using something without permission and without compensation. I'm a patent holder. I'm not out to sue anybody, but I'm also not out for people to take things from me. So and that works. It's just basic property law and not law, economics, as I see it.
Yeah.
Um, I the argument that I've heard that patents and intellectual property protections slow innovation does not match reality. In the beginning of this conversation, I went through the top 4 economies in the world, and in reducing order, each and every one of them have the top 4 strongest and largest patent offices. That's not a coincidence. And if it was, it's hard to get a coincidence 4 times over. And the reason is because strong property protections are the cornerstones of capitalism.
Hmm. I have a question. So, like, what prevented someone from like just copying Bitcoin and then patenting it and then just like bodying the whole industry? Like,
I
what
bet someone
Because
prevents
tried.
that?
yeah, you can't patent something already. A patent is the right to sue somebody who takes your property. So if you copy Bitcoin, it's not your property, so
Gotcha.
you can't patent it. So he like if I go to his house and I just move in, I can move in, I can rent it out, and I can put my dirty feet on a dinner table, but it's not mine. I'm doing it illegally, but I can still do it. But he has a right to sue me or other things to me because it's his property. So
Also,
no
depending
matter
on
what I do,
licensing.
I can't say it's my property because it's not. It's his property.
And for the things that like you do build, if you use like open and permissive licensing, there's clauses in those licenses that whatever you build off of them has to maintain that license. And in a
Yeah,
lot of
and
instances
that
of a lot of the things that people use, it's guaranteeing that like the stuff built on top carries this permissiveness and openness.
which is the exact same tenet of patenting. That is an aggressive use of intellectual property rights because you're telling somebody what they can or cannot do with your property by saying you have to include this copyright or you have to, whatever you build on top of this has to be open to the community. If you're forcing somebody to act in a certain way, you're aggressively using your intellectual property rights.
And using the same system to enforce it.
Right. So and that's why I did a tweet earlier saying that you cannot be in favor of open source software licenses and say you're not in favor of intellectual property protections. Because an open source license is intellectual property protection by definition. And you
Hmm.
know, I don't look at any of it as good or bad. I'm the low man on the totem pole. I'm the David in the David Goliath battle. I don't have hundreds of billions of dollars of capitalization. I'm socioeconomic minority. I'm the racial minority. I'm not invited to the club. I'm not a member of the club. Um, but I own the deed to the clubhouse, and that ability to own that property allows me to force myself to the table. Without the intellectual property protections, I would be ass out.
Hmm.
So you're saying this system has given you a leg up, whereas and otherwise you wouldn't have had one.
The system has given me the ability to attempt to claim ownership of the property that I have by recognizing the ownership of the property and giving me the right to force others to the table. Without that, then the big VCs who chose not to fund me or the big tech companies or the big finance companies would roll right over me. Do you really think they'll say, Reggie, I know you invented this. You're a nice guy. Come on, we're going to give you your 30 or 40% cut, which you deserve. Is that what JP Morgan is going to say to me? I doubt so.
Hmm. No, I don't think they'll say that at all.
Really?
But that's just my
That's a
opinion.
shocker.
Um, so you've been coined as, and you coined yourself as the 2013 founder of DeFi. That's got a lot of
Actually,
weight
somebody
to
else did that, but I just keep running it. It sounds good. So.
it. That's a powerful. I mean, DeFi is it's not a small cookie right now. It's a big cookie cake. Everybody loves
Mhm.
DeFi, even though I think maybe like 0.5% of the people that say they love it actually understand it. I still try to understand it to this day. Like I've tried to explain impermeable losses to someone, and it looked like their brain melted out, and so I just
Impermanent
stopped.
losses.
Impermanent losses. Sorry,
Yeah.
not impermeable. That's like membranes. All right,
Mhm.
impermanent losses. So, who said that, and why do you believe that they gave you that moniker? Not
Um,
no, we don't want to name drop, but why that moniker? What were they speaking to, and like why did you get
I
that
believe
reputation?
they see, and I don't disagree with them, that I'm the first one to publicly display the financial concepts and working product and the financial engineering languages behind peer-to-peer capital markets, which is what I feel I invented. So DeFi is a subset of peer-to-peer capital markets, which is a superset of everything else. And basically, it's the ability to autonomously hold and transfer value um, contingent upon something else. And that is what makes what I invented different from Bitcoin. So Bitcoin, which is existed before I filed the patent, before I even got into the industry, is a peer-to-peer internet money system or currency system that allows you to send value from A to B. So my invention allowed you to send value from A to B conditionally and without the need of an authoritative third party, which can be plugged in optionally, but is not needed. And it also does it by minimizing counterparty and credit risk.
So you
So I
have
think
like a patent on Uniswap before Uniswap was a thing?
Yeah, Uniswap was launched in 2018. I think they started working on it in 2017, and I did this in 2013. So
How
to
does
give you a timeline, uh,
yeah.
I came up with the idea in 2013. As a matter of fact, the second I read the Bitcoin Wiki, not the second, but within 15 minutes of reading the Bitcoin Wiki and the Bitcoin white paper, it popped directly in my head. I'm a finance guy and strong on valuation and financial engineering. And when I read that, first thing I saw was the blockchain is the ultimate common counterparty. And scripting, you can program transactions. You can't beat that. I thought maybe I was late to the party because if that's capable, why isn't everybody in doing this? As it turned out, I was actually rather early to the party. So we created a peer-to-peer swap. The first one settled December of 2013, and we polished it, created a functional, bug-free beta, relatively for beta, and just put it out for public use for everybody to swap on it. And we filed patent applications in early 2014.
What's the
Um,
difference like in like swap mechanisms between what you guys made and then what Uniswap does?
um, well, Uniswap, to get in details, Uniswap uses a liquidity pool. So he uses a smart contract. You send assets to it, and assets are then taken out by another party. So I could go through it, but I think it might be unnecessarily detailed in the
We
weeds.
are almost hashing it out. Can we bring you back again for the in the woods
Oh,
conversation another time?
so just to fill you in, Reggie, we have another show that we're launching. This one will be closing shortly, so you got right in at a good time. But we have another show where we are getting into the weeds and getting into the
Okay.
details of these mechanisms and things like that. But you're right. Maybe we'll save it for that show
Yeah.
Okay.
because that's the kind of audience that's for.
Yeah. Well, to make it real simple, it's in the name. Uniswap is a swap. Okay. What we did basically, a swap is a subset of what we created. So swaps through the blockchain are one of the things that we created. Uniswap does it. I'm going to give you a quick chronology. So I created it, recreated it 2013, filed for patent protection in 2014 in May, April initially, and then May. Um, at the same time, Bancor did an ICO, Israeli company. They came up with a pricing algorithm very similar to what Uniswap used. That pricing algorithm, if applied for the transfer of value, would have infringed on our patent, in my opinion. Okay, I'm saying this for legal reasons, in my opinion. Okay, Bancor raised a decent amount of money, like 150 million, but received so much penetration to the market. A guy from Brooklyn, a lot of these guys are from Brooklyn, came in, um, fought Bancor, made a couple of changes, okay, and then came up with Uniswap. Uniswap was fought by this guy named Nomi Chef, right? Simply hit a fork, took the code, came up with Sushi Swap. Took about 55% of Uniswap's liquidity, right? Sushi Swap was observed and then fought by these guys that created Pancake Swap and took that liquidity and brought it over to Binance Chain. Now, if Bancor's original concept infringed, Well, then Uniswap infringes, and then SushiSwap infringes, then PancakeSwap infringes. So it's not like the patent is massively covering everything. It's that there's not nearly as much individual unique thinking in the industry as most people believe. The fact that it is open source means people are quick to hit fork, but very, very slow to do IP due diligence, to actually test the code out to see how robust it is, to see if there's a better way of doing it from a financial engineering perspective, et cetera, et cetera, et cetera. That's a weakness that permeates through the industry, but it's very good for us because if you want a lot of people to use our IP, that's the best way to get it done. Just everybody's fork everybody else. Just make sure that original fork project
So
is sitting within our.
there's a cycle that I've noticed that I've never really expressed out loud, but it seems like this is the cycle in crypto. Whenever you get these booms, is you get somebody uses this recipe for success: copy, paste, profit, run. Do you see do you see an end to that? Because I feel like that's the cookbook right now. This is like my third super cycle now, and it's just like you said, Uniswap, then Sushi Swap, then Pancake Swap, then let's just call it Mustard Swap. I don't know. Copy, paste, profit, take off. Right.
Well,
So
there's this
you're
infringement swap, which is going to hurt. And and I say that I don't want to seem like I'm the opposite of that. I can't stand litigation. I've been trying to talk to people in the industry for well over a year. Personally, I don't think there are a lot of grown-ups in the industry. There are more coming in, but they have a very dogmatic ideology, which I think is not practical business. But that's my personal opinion. There's two other patent holders. Total Return Systems, which has a patent over the use of a centralized data for a store or Oracle for decentralized projects. So if you're doing business between layer one and layer two, there's a good chance at volume, there's a good chance that you may trip one of those claims. Uniswap and Compound and MakerDAO have been approached and potentially served by them. And they put out the full claims analysis in public for everybody to see. And and the legal motion is there as well. The order to show cause is there right on the website. Do a search for Total Return Systems, MakerDAO, and Compound DAO. And it's what it does is the patent is not sloppy. I don't see too many weaknesses in that. I didn't go through it in full detail. But what this does is it's piercing the bubble. And that patent is a mere microcosm of what I think our patent technology is. I think of our patent as foundational technology because it covers wide swaths of entire blockchains. But what he did is very specific, but it hits right to the core of what a lot of guys are doing. And everybody's doing it because they just copied the other guy. There's not much original thought. These investors are getting sued. And he's not suing them due to contributory infringement or induced infringement. He's suing them because the investors invested through a DAO. Okay. And the DAO, in return for the investment, they got governance tokens, which allows them to vote on projects. And they're looking to get a return on capital. What does that sound like to you? Put money into a project as a group, right? Expect a return on that investment and have the ability to vote on corporate affairs.
Sounds like a
Sounds
security.
like a common stock, right?
Yep.
And if anybody has any anathema towards the SEC and their enforcement arm, it would be me. Okay, I think they're overzealous, to put it nicely. But if it walks like a duck and quacks like a duck, cracks like a duck, it's probably not a platypus. So they put this money in, right, with the expectations of return, and they can vote on it. But this is not about whether it's an investment or not. This is about the risk return ratio for the investment. Because a DAO doesn't have a corporate form, there's no legal liability limitation. So if they did it to an LLC, right, the LLC stands for limited liability company, their liability is limited to whatever they put in. If it was a corporation or an LLP or any of a variety of forms of corporate entities. But as a DAO, which is supposedly decentralized and doesn't adhere to the laws of the land, if this were to go to court, there's a very strong chance that the courts would say, well, I don't know what a DAO is and digital autonomous, I don't follow that. But what you just formed was a general partnership. And a general partnership has no legal liability limitations. And that means that each member of that partnership, each member of that DAO is jointly and severally liable for the liabilities of the operation. Jointly means there's 4 of us here. If we formed a DAO, all 4 of us are liable for whatever happens to that DAO. And severally, all 4 of us separately are also liable. So 3 of you guys are much wealthier than I am. So 3 of you put in $10 million each, and I put in $1. We find out that StreamYard DAO infringed on XYZ patent. They were notified of it, they ignored it, and they continued to infringe, and they're making $300 million a quarter. A lot. So that's $1.2 billion a year. They end up going to court. They found out that not only is there infringement, but they willfully infringed by ignoring notice. So now treble damages, up to treble damages come into play. Let's call it treble to make it easy. So out of that $1.2 billion, they would owe roughly, off the top of my head, say $300 million annually. They did it for 2 years. So that's $600 million times 3, $1.8 billion. I invested 45 cents. I'm on a hook for $1.8 billion as an individual. Why? Because I went in as a joint or a limited partner. Instead of going in the corporation where I could lose 100% of my 45 cents, but there's a ring around it. Now, I'm just open. Does that sound like a good investment to you?
It doesn't the way you explained it. So is that
It doesn't the way.
it doesn't sound good at all. So what? Then the goal is to just get it so damn decentralized that everybody's risk is minimal. But that's not possible because the pot keeps getting bigger.
No, the
Right.
goal is to try and get what people would consider antiquated models for building organizations to adapt themselves to a new technology. That's going to take a long time. Like
That's
you
a
said,
paradigm
the
shift.
court's going to say, I don't know what the hell all that means, but I know what I have in front of me and the precedents we've always had. So let's move with that. This
That's
looks a lot
exactly
like
what a
that.
judge would
Let's
say.
do it.
I can tell you that. You get in front of a 72-year-old judge
Yeah.
and drag him if you want to. Good luck to you, dude. But it doesn't take
with
that long.
whiteboards.
You could go to Wyoming right now, and Wyoming has customized their LLC laws specifically for a DAO.
Mm.
And if I'm not mistaken, I think Delaware has done it. That was actually relatively
Does
quick.
Denver have them too?
I'm not aware. I'm not a lawyer, but I keep abreast of things, but it's hard to know everything. The problem
Here's
is
the problem
not
now.
Yeah, the biggest problem is there are not a lot of grown-ups in the space on the operational side. And I'm being honest because
What are you talking about? This is a nice hoodie
my
I'm wearing
experience
right
as
here.
well.
Kid can't
yeah,
afford this hoodie.
and the investors know better, and they are grown-ups. And either I am missing something, or they've put a lot of their limited partners at risk. You know, the third patent holder, there's Total Return Systems, and then there's also the very popular guy from nChain, Craig Wright. Okay, hate him, love him, whether he's Satoshi Nakamoto or not. I never really understood the big interest in it. Who cares? You know, right? The guy has 53 issue patents. Most of them are staunch in minutiae, in my opinion. You know, don't really mean a lot, but there's one, maybe two, that have some teeth to it. Here's a patent that looks like it covers tokenization, which means if it does, then a lot of these stable coins are going to fall under it.
That's so
I still
nuts.
think
That some
our
dude can like
foundational
write
technology
something.
Kind of
is
the
a
goal of
superset of
patent
that.
trolling, isn't it? It's like that's the whole point of patent trolling is to buy things that can be potentially useful and then apply them when they are.
But he didn't
It's a
buy it.
future
He created
pirate.
it. Wait. He's the inventor. You can't call an inventor a patent troll. If
Okay,
anything, the
I'll
people
give
who are
you that.
using it are patent trolls because they didn't invent it. You can't,
Wait, I thought
like, I
patent trolling
created
is
my
like
system.
a verb.
I can never be
Patent
called a
trolling is
patent
buying
troll.
patents. Yeah.
Say it again.
The patent trolling is buying patents. You
Right.
didn't necessarily
Well, no,
buy
not necessarily. Patent trolling is buying a patent and then pressing lawsuit in an area where you are not active. You're not an active participant.
Yeah, it's
Okay,
putting
but
us.
Fiction.
right now that's a technical definition of patent trolling, but it's also irrelevant. It's legal. So if you don't like it, go invent your own stuff and do something about it. That's the way I look at it. But you can never, and there's a group, I'll get to that. There's a group of very influential people who are calling entrepreneurs patent trolls because they're trying to defend their invention. That's ridiculous. You cannot steward a 60 or $80 billion company, okay, with hundreds of patents in your own portfolio or dozens. And then when an entrepreneur who invents something, regardless of how likable or unlikable he is, he invents something, he patents it, and then or copyrights it or trademarks it, and then he comes after you to ask you to stop using it. He's not the troll. You're the troll, right? There's no way in the world you can ethically or legally or practically call an inventor of something a troll if he's trying to exercise rights over his own invention. That's like calling you a trespasser in your own house because
So
I
I
want to
guess
move in and you're in my way.
when you're talking about patents, like, don't you have to, like, if you change a pre-existing idea that's been patented a certain amount, then it no longer
You need a
is
sufficient
within
level
their
of
right.
improvement in order to.
Right. So how do you determine that
It no
sufficient
longer.
level?
Hold on a second. You sort of talk at the same time, so it no longer what?
So the idea is, Corey can elaborate, but the idea is that if you can iterate on a previously held patent well enough, can't you create your own patent over that new technology?
Yes, but there's
So
nothing wrong with that.
so no, I'm not saying that there is anything wrong with it. So I'm just curious now. So when you're saying that, let's say Craig Wright had a patent where he has generically described all stable coins. So like USDC that's created by Circle, the organization, are they going to be, I guess, sued? Can they be sued by Craig Wright because he holds, that generic patent?
Okay. Well, here's a couple of things. In the U.S., anybody could sue anybody else.
Sure.
But if you
Yeah.
do an arbitrary and capricious suit, depending on what state or if it's federal, you risk getting hit pretty hard if you do a nonsense suit. But anybody could buy an index number and sue. So just to keep that in mind.
Okay.
Generic patents generally don't get issued. And I can tell you right now, in the blockchain space, they're never going to issue a generic patent.
Okay.
90% of blockchain-based patents are rejected. 90%. And that's at the application level. That's not being tested in court. They'll never even make it that way because you don't get a patent. Blockchain patents are very, very crucially examined. It took me 7 years to get my patents. I have two. It took me 7 years to get them issued. 6 years for Japan, 7 years for the US. Okay, so, and they tried very, very hard not to give me the patent. We fought until, we prevailed.
Does it cost a lot of
So
money to do that?
Yes.
it costs a
Okay.
lot of money to do everything. It costs me a lot of money to go shopping. Look at
Answer
food
is
prices.
yes.
So,
Yeah. The
it's,
answer is hell yes, Jesse. Yeah.
and that's another thing. If it took a lot of time, a lot of brain power, a lot of money to invent it, right? And then do a proof of concept and create the code and the program, and then cost even more money or as much money to prosecute the patent. So I put all this money and my time and effort in over an 8-9 year period, and then someone just comes and uses it for free. And if I attempt to defend myself, I'm called a patent troll, or the entire concept
Money
of
too.
entrepreneurialism and capitalism is being turned upside down. Now the reason is, I can tell you the reason is because large companies rarely iterate quickly. It's hard to maintain that creative fire of entrepreneurialism of a small startup or individual when you get large and you're running, 80, 40, 60, 70 billion dollars a year in revenue, 20, 30 billion dollars a year in profits, or $5 billion a year in profits. Very difficult to keep that fire. So if you can't build it in house, then you have to take it. And that's what they do with patent. There's willful infringement with big companies because they say we'll just outspin the little guy. Okay, and that's why the punitive damages came into play to try and put a cost on someone who does that. So that's why they create the patent troll boogeyman for individuals who are just protecting their own, property. Now, I've been talking a long time and I had a point and I forgot what it was. But if any of you could remind me what I was looked like I was going to lead up to say, I'd like to finish it. But that's it in a nutshell as I see, the environment. This bubble is going to be popped because the concept of a generic patent. In the blockchain space, there will be no such thing as a generic patent. I doubt so very seriously. If you look at all three of the patents I was discussing, if you look at my patent, look at Total Return Systems patent, and if you look at Craig Wright's patent on tokenization, they're actually extremely detailed. My patent is 46 pages, and it is extremely detailed.
Can you link your patent so we can read it?
I mean, you just Google it.
Just
Oh,
Google
okay.
Reggie Middleton patent, go past
Okay.
all the SEC
I already got it
warnings
up.
that I was fraudulent for marketing a patent that I knew I would never get. And right above that is the patent that I got. Interesting, right? And just Google it, Reggie Middleton patent. 566, I think, are the last 3 digits.
Man, I hate to wrap this conversation. It has been a 45-minute interview, a juicy one. I guess we're gonna have to wind it down with some of our copyrighted trademark phrases, but like now we should since we've talked about legal so much, maybe we should actually get the damn trademark. So like now I'm nervous. Like, but,
And let me put a disclaimer in case you ever. I am not a lawyer.
None of
so
us are.
I cannot give legal advice, and I have not given legal advice. And you shouldn't take the advice if I gave it to you anyway. You get what you paid for. I am pretty strong in finance, but that's my personal opinion. I'm not giving you financial advice. I'm just giving you Reggie's opinion. So I'm not a lawyer. I'm not a smart guy. I'm just a dad. Okay.
That's
Basis
crazy.
And
that
I'm a
you-
dad that yells at their kids on top of it. So.
Yeah.
I played a lawyer in a video game once, so audience, I don't recommend you listen to me. I really don't recommend that. Okay, well, let's hit them with the questions. Jesse, you go first.
All right. Is what you do actually difficult? And that can be like whatever you want that to mean.
What do I do about what?
I don't know. like I guess whatever you want. It's really open ended.
Okay, so what I do comes second nature to me. For instance, when I read the Bitcoin Wiki and the Bitcoin white paper, coming up with the concept of peer-to-peer trustless swaps, I didn't think about it. It just appeared in my head. You know, like someone put their hand in front of your face and you close your eyes. It's a reflex. That's not difficult. It's not even an effort. What is difficult is I'm a contrarian by nature. I don't fall into the crowd. When everybody agrees with me, I start to think I'm probably wrong. And, you know, I usually am when everybody agrees with me. It's just a matter of timing. But pushing against the crowd and being discriminated against, and true discrimination, I'm not talking racial discrimination, even though that's there, but discrimination as in you're not part of the clubhouse, you're not part of this particular set, you're not from X, Y, and Z. And then everybody pushing against you, it can wear down over time, but you just simply have to persevere. Okay. Almost every genius that was able to capitalize on their genius, I'm not saying I'm a genius, I'm giving an example, was considered insane in the beginning. Okay. Everybody came up with a very strong idea was considered imprudent. If you listen to Elon Musk talk about Tesla and how he could make payroll multiple times and his poker game, etc., you're like, wow, look at the risks that he took. But most people don't see that. They just see the richest man in the world, allegedly, with multiple companies that are all executing. But
Thank you
if
for
you
adding
take a look
that,
at an
allegedly.
iceberg, you see a little tip of ice above the water. But if you look below, the majority of the mass is below the water. So when someone does something,
Goose blocks. You thought it was all success, and the reality was I was in the kitchen stirring a pot.
yeah, nothing is all success. The success might be what gets put on Instagram, but the reality is you fight, you suffer, you persevere, you sacrifice, you fail. Failing is the stepping stone to success. So to get a very strong success, you need about 149 failures. Okay,
Yeah,
and if
fall up the stairs.
Yeah, so if you have a problem failing, you know, this is not the job for you, what I do at all.
You're not going to do good.
Well, go ahead, Corey.
Go ahead, D. I'll go. Because it's more open ended than yours. Is there any question you would have liked us to ask you that we didn't?
Not that I could think of them. I'm flexible. I'm just here to answer the question. So.
Nice. The last question is, and this is, you know how to frame it. Here we go. In 10 words or less, can you describe DeFi?
The ability to autonomously, okay, 10 words. Don't go count my words. We're going to do this.
I'm not counting.
Okay, but I'm going to try and make it work. So I need to learn to shorten everything up. Okay. Autonomous transfer of value, the contingent Autonomous transfer of value.
That's
Contingent
5
autonomous
words, but
transfer
who's
of value. 5 words.
who's
Ah.
counting? Audience, thank you for tuning in. Reggie, thank you for showing up. And I've listened to you since I got into Bitcoin. I think I stumbled upon some of your interviews on like RT and some of your interviews on what's the big money? It's got the Kramer guy.
Oh, CNBC.
Yeah, CNBC. And like I was like, man, this guy speaks, it makes sense. And hopefully, audience, if you're listening, go Google Reggie Middleton. Just look him up on Twitter. It's all right there. You'll find out like his history just speaks for itself. And it's like a great opinion just to take into consideration as you're doing your own due diligence, right? And it's not just a meme when we say do your own research. Or no, I'm not gonna say research because I know that offends Corey. Do your own due diligence. Do your own due diligence, right? And so anyways, thank you, Reggie, for swinging by, and we hope to have you on Hashing It Out very soon. That's sparking up here in like 3 weeks. So
Okay. Well, thank you for having me. I look forward to it.
all right, in the broadcast.